It's time to spotlight big tech earnings ahead of course, Nvidia's earnings tomorrow. Joining us now is Caleb Silver, the chief business editor and Investopedia. Thank you, Caleb, for being with us. I'd love to just get your thoughts on this weakness that we're seeing led by tech today as our setup going into Nvidia tomorrow.
Yeah, well, it seems like the reversal, the sector rotation is not over with quite yet. I think there's a lot more selling to be done if you look at all the pressure and all the pessimism that's suddenly built up around these stocks. Global fund managers went from bearish to finally bullish in the fall and then finally turning bearish again. It's funny how quickly sentiment changes. That said, these companies are still putting up good results, but the bar has been raised so high. And now the turnaround to see when all this big spend, especially by the superscalers, turns into margin improvement and more profitability, that's gotten even higher.
It's very interesting, too, to see who's being rewarded for this big spend and who's being punished for it. There doesn't appear to be a great deal of rhyme or reason, some of it tied to market cap. The trillion-dollar companies seem to be being given more forgiveness here. But what have been some of your takeaways or even surprises that we've seen from reactions in terms of the tech earnings we've already gotten?
Yeah, you got to be a little bit shocked when you see some of the reaction, especially when some of these companies are still putting up more than 50% profit growth and their margins are still pretty healthy, even though they're promising to spend hundreds of billions of dollars over the next few years. But again, investors want results. They want profit growth now, given all the spend that's already happened and that's been promised. But when you look at some of the companies that have really gotten hit hard here, it's some of the most favored stocks by retail investors and individual investors that we keep piling our money into week after week. I like to look at the top stocks being bought by retail investors outside of our defined contribution plan. Schwab has a good movement index that tracks that as well. These are the biggest stocks out there that have taken some of the biggest hits, but they're also the stocks that retail investors own the most and that have owned for the longest period of time and intend to hold on to.
Yeah, Meta, one of those big names that we saw take a massive pummeling in their earnings and, still seeing it being one of the top purchased stocks. But let's focus here on Nvidia. A lot of expectations going in here. I think everybody looking for it to be a major market catalyst. The question is, in which direction is it going to go? The sentiment I keep hearing is that it will be a good quarter. The question is, how much better than the expectation does it need to be to see a positive reaction in the markets? What are your thoughts there?
Yeah, expectations are sky high. And if it's not a complete blowout quarter with great guidance going forward, I don't think investors are going to take that very well. You can already see some of the pressure and some of the selling going on just over the last couple of weeks, really since the end of October in that company. But it's all about that revenue, right? Data center revenue. We got to see a lot of that. We got to see and hear from Jensen Huang about a lot of demand for Blackwell and Rubin. Those are the chips for those data centers, and also the forward guidance. How aggressive does the spending look going into 2026 and beyond? Because there's been a lot of promises made. There's been a lot of money either spent or pledged to be spent. Is that actually going to be realized by Nvidia? And if so, where's it coming from and who's actually paying them that money? I think investors are going to dig pretty deep into that and listen to every word he has to say. And then you want to look at gross margins because they're spending a lot of money, but this is one of the best performing gross margin companies in history. That's why it's one of the best stocks in history. And it's got market share now of 90% plus. Is that being eroded by AMD? Would they speak to that if that's actually happening? What is their plan for retaining that deep market share that they have?
And Caleb, you highlighted a lot of the big ticket items that are in focus here: margins, market share, their data center revenue, which is, of course, very important, and their guidance. Of those four, what do you think has the biggest potential to move them in a negative direction if it's simply in line? I mean, we've seen that quite a few times this quarter already.
It's got to be guidance because investors are looking way out into the future for this company, which has a very high price to sales ratio and a very high price to earnings CAPE ratio as well. So it's got to say that we're going to continue stacking revenue in the same pace for the next year or so, just given the super spend going on right now by some of the biggest companies in the world. And a lot of that's going to depend on how the competition is, but also on what happens on the global front. What is going to be the relationship with China going forward, especially as it relates to Nvidia, especially as it relates to semiconductors? Are right in the middle of those conversations. So it's not as if it's just charting its own course. It's impacted by global affairs as well.
Certainly. And you mentioned the super spend and Nvidia's spending spree that it's been on. A lot of questions there about where the money's going, who's paying for it, where is it coming from. We got another announcement from them this morning. You know, their tie-in with Anthropic, Nvidia investing $10 billion into the startup. Jensen Huang saying it's a dream come true for us. That was his quote about their investment there. Also, Microsoft tied into this deal as well. You know, what are your thoughts about this, especially with the timing of it being one day in advance of their earnings report?
Yeah, I think that's fascinating. And when you look and the fact that Anthropic, I believe, was on 60 Minutes this week as well, the timing is very interesting indeed, especially with earnings coming up. But when you also think about maybe the way that Nvidia and some of these superscalers are thinking about the future of AI and Gen AI and robotic AI, is that going to go through a commercial platform like OpenAI, or is it going to move on to the more advanced AI companies like a Perplexity? So I think they're also spreading their bets. The whole game here is a zero-sum outcome. Either you control AI and the future of it and the data being processed with it, or you're outside of that and you're paying into these companies. And I think for these companies, there is no second or third place. They're going to spend as much as possible and do as many deals as they can to make sure that they have a moat surrounding their AI ecosystem for the next decade.
Yeah, if you're not first, you're last in this race, right? Not to quote Talladega Nights on this day, but there we are. I want to move on to yesterday's big story, though. We saw Alphabet take a major move to the upside on this news of Berkshire Hathaway's having them $5 billion stake there and their 10th largest equity holding, a rare move into tech for them, and also reducing their stake in Apple. You know, as far as what that says and if there's even any correlation there, what were some of your thoughts when you saw that come across?
What took you so long? You know, Alphabet has definitely been the better performing of the two for a while, but also it is facing the future mostly with software and with AI, whereas Apple is a product company at the end of the day and relies heavily on discretionary spending. We know Berkshire has been trimming its stake in Apple for a long time. It's still its biggest equity holding, and it's still one of the biggest investors in Apple. So you've got to look at it on a relative basis, but the trend is the trend. And you would have thought, and I've heard Buffett say this in the past, that he wishes he would have bought Amazon a decade ago. Well, maybe they should have bought Alphabet a decade ago, or at least 2 or 3 years ago, to take part in some of this upside. It also shows that, you know, these new decisions are being made by Greg Abel and his investment committee. I'm sure Warren weighs in on everything, as he always has and probably always will, as long as he can weigh in on anything. But still, it seems like it took a long time and the timing's strange. That said, this happened over the past quarter, so we don't know exactly when the investment began, but it is an interesting note, and you got to wonder if there's more behind that, because Berkshire Hathaway has a ton of cash ready to spend.
They certainly do. And as far as mega caps that you're watching, I know you said that you track very carefully what is happening in retail, what's being bought, what's being sold, what some of the top performers are. As far as what you're watching as we head into 2026, you know, what's sticking out to you?
Well, investors, especially retail and individual investors like us, we become so faithful to the stocks that have taken us this far in this bull market and really beyond, really for the past decade or more. And when you look at the top holdings by individual investors, and we survey our readers every 2 months about this, it looks like the top of the NASDAQ 100. You got Nvidia, Meta, Microsoft, Apple. You got maybe a Palantir and Amazon in there as well. And those are the top stocks we continue to buy, even though they haven't been the best performing stocks so far this year. And the hard part about being an individual investor picking stocks is that you're going to miss some outperformance by companies if you're just focused on those mega caps, like so many of us are. And the top performing stock so far this year, obviously, has been Western Digital. That's a chip company, but Robinhood up 260+%, even with the sell-off recently. Palantir, of course, has done very well. And you have Seagate Technology. You got some chip companies in there, and a Warner Brothers Discovery. Just shows you how hard it is to be an individual retail investor trying to pick the right stocks, when maybe if you just invested in some of the big ETFs out there, some of the big indexes, you might have been a little bit better off, especially as the market starts to crumble a little bit here. If you're too deep into some of these names, you're going to feel it. And the fact is, retail investors like us, we are super deep into the biggest stocks in the market. We are in the crowdest trade in the market, as well as the biggest global fund managers out there.
Well, Caleb, we appreciate you taking the time to talk all of these big tech headlines with us, especially in advance of Nvidia's earnings tomorrow afternoon. That's Caleb Silver, the chief business editor at People Inc. and the editor-in-chief at Investopedia. Thank you again.